core PPI month over month forecast was for 0.2% increase. We saw a 0.3% increase. How do you understand that to be? Essentially, what that's telling us is inflation remains slightly elevated. It's coming in slightly elevated. Now, if we look at PPI month over month, this is with food and energy combined. Forecast was 0.3. It came in at 0.5%. So again, much hotter than expectations. Again, this to me continues to reiterate what I've said for many, many months, is that ultimately inflation is going to get sticky around 3%, and it will be very, I repeat, very, very hard for the Federal Reserve to ultimately drop rates substantially. Can they throw out a mercy cut when the markets get nasty? Of course, but they're not going to be able to drop us back to levels where we saw over the last 3, 4, 5 years, and that's going to be long-term problematic for getting us out of the recession that, I mark my words, guys, this is coming. The data continues. Everything I'm seeing, we're starting to see the yield curve uninvert. That's exactly when you start to see the recession. We're talking probably within the next 3 to 6 months, we will be in a recession, possibly even sooner. So be ready for it. I'm here to help you trade it. I'm here to help you make money. The only thing I want to kind of bring your attention to here is still the chart. The chart is everything. So on a short-term basis, let's analyze this. In fact, I'm going to bring it up a little bit so we can get it a little higher on the chart for you guys. All right, so Bitcoin has a resistance line right in here. From this previous top, we pierced it. That's resistance number 1. Resistance number 2 is right up here, which coincides with this area, and then resistance number 3. As it comes down, ideally you want to see a daily close within these lows. Right now we're below that, but we want to see where today closes. If it closes below, it doesn't make it fully negative, but it does hurt the bull pattern a little bit. This pattern then would no longer be valid, but you're still above this down-sloping trend line here. So what you're doing here, and might be a little bit complex, but essentially it adjusts the odds. So imagine when you're in this range, if the odds of a move up are probably, let's say, 80%, okay? Now, that's pretty heavily favoring the upside. If we close below this line, but we still remain above this down-sloping trend line, the odds probably adjust to 65% probability that it's up. If you break this line, all of a sudden, the odds of up go below 50% to, let's say, 30% upside. So do you see how at each level as a trader, there's no like it's 100% this or 100% that. It's literally like the adjustment of odds. Like think about it. If those of you guys that watch World Series of Poker, you see how the odds adjust every card that's dealt? It's the same thing. Each card here, right? And shout out to Gianni there in Vegas. I know he'll understand this. But essentially what you have, guys, is that every candle you get is like you're flipping over a card in poker. And it will adjust your probabilities to what the next move is. And that is the essence of it.
Recent changes to ARK Invest and 21 Shares joint spot Bitcoin ETF application could signal a step toward approval. The updated filing submitted to the SEC on October 11 provides more details on how the ETF will handle asset custody and valuation. These changes are seen as a positive move in response to concerns raised by the SEC. Bloomberg's senior ETF analyst, Eric Balchunas, noted that ARK's amendments address the SEC's comments, suggesting significant progress. Among the modifications, ARK clarified that the fund's net asset value, NAV, calculations do not align with generally accepted accounting principles, GAAP, an important SEC standard. The new filing also emphasizes that the ARK's assets, held by Coinbase custody, are kept in segregated accounts, separate from corporate or other customer assets. This adjustment signals a productive dialogue between ARK and the SEC regarding regulatory requirements and potential concerns. Scott Johnson, a partner at Van Buren Capital, also pointed out that the updated filing addresses the impact on the ARK's value if Bitcoin is increasingly used for illegal activities or faces environmental restrictions due to mining. Overall, these changes suggest that the SEC review process is proceeding smoothly, making it a promising sign for the future approval of this spot Bitcoin ETF. In a courtroom drama tied to cryptocurrency, revelations have emerged regarding a plot to manipulate Bitcoin's price. The trial of Sam Bankman-Fried, FTX's founder, took a dramatic turn with his ex-girlfriend's testimony. Carolyn Ellison disclosed conversations suggesting a deliberate effort to suppress Bitcoin prices if they surpassed $20,000. She also revealed concerning practices within the FTX ecosystem, including a massive $13 billion borrowed from FTX customers. Additionally, the trial raised questions about a lending platform called Genesis, which requested $500 million from FTX, leading to concerns about the transparency of the transaction. These revelations cast a shadow over the integrity of FTX and its founder, Sam Bankman-Fried, and raise concerns about market fairness and investor trust. As the trial continues, the cryptocurrency community and market watchers eagerly await further revelations and potential repercussions for the individuals and entities involved. Amid these dramas, Bitcoin's price continues its downward slide, currently below the $27,000 mark, down 2.7% in the last 24 hours. The crypto world remains as unpredictable as ever. Let's continue our enlightening discussion with Gareth Soloway.
One of the things that I've noticed, and this is something I want to bring to your attention, is look at the sell-off in gold and then look at the reflex bounce. So number one, the sharper something sells off, the sharper it bounces. That's just the nature of the beast, right? If you basically are in a scenario where a stock drops like this, it'll have a retrace like that. If a stock goes like this, what do you think the bounce is going to be? The bounce is going to be like this, right? A much smaller bounce. So I actually prefer this pattern formation. I prefer the much sharper bounces because drops because you'll get bigger bounces to them. Now, one of the things here that we got into here is essentially, let me just get rid of that. Hang on one second. There we go. One of the things that I want to kind of impress upon you is that this type of drop on gold is basically a flush out. And this happens before bigger moves. So when I see this, and let me erase these lines, but basically when I see this, to me this is probably the last big flush out on gold before we eventually break up. Now, I still think that, again, and I showed you guys this before, right? This pivot low to this pivot low, that's your target, and that's probably where we're going to have short-term resistance. But this is very short-term. This will probably go like this, and then it's going to break up like that. Now, again, this is the final flush out. It's the nastiest flush. Many down days in a row. I can't tell you how many people were saying, oh my gosh, Gareth, what's happening to gold? Oh my goodness. Well, and what did I say in these game plans? Don't worry, it's still into support. As long as support holds, it holds. And again, it's about not panicking, not letting that emotion get the better of you. As soon as emotion gets control of you, you're good. You're done. The market great white sharks, the sharks out there will smell that blood, that emotion, which is the blood to them, and they will eat you alive. You have to go by the charts. It's the only non-biased thing you have. Everything else, what I think, what I feel, what my heart says, what I really want, that market doesn't care about that, right? So in any case, what we have in this situation, guys, is probably the last flush out.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.